Quality to separate them more. Step 7, fabricate a problem, made a lie. Step 8, put it on the news every night. Step 9, when people start to fight and divide, take control. This is called situational. Quality to separate them more. Step 7,
cause we're ready to fight, trying to brainwash us, but we won't let freedom die. The whole world's brainwashed.
What's up, guys? Give me a second, I gotta turn off the music. Too much shit open. All right. Can everybody hear me? Type 1 in the chat.
Loud and clear, man.
Awesome. Awesome. How's everybody's weekend? I hope you've been productive. If not, you got rested. We got an awesome week in front of us. Last week was amazing. We're gonna go over some setups. First things first, appreciate each and every one of you. I wanted to say something before we actually start getting into the charts and all. With everything that's going on in Afghanistan and stuff, if you or someone in your family has served or is active military right now, I just wanted to say thanks to everyone for keeping us safe and doing duty. I have one of my best friends from high school whose brother served in Afghanistan and then died from suicide from PTSD. So it's some serious stuff, and what's going on right now well, my opinion only, it's embarrassing for the country. Yeah, just wanted to say thanks for everyone's service, if you served in the military or if you're active military. Afterwards, on that note, I wanted to also say that everyone you see as far as the charts, we are not financial advisors, and nor do we claim to be. We're not licensed. So everything you see here is just our opinion of the market. Welcome to the stream if you haven't been here, if this is your first time. And let's go. Ryan, you got anything to say?
No, I think you covered it pretty well. I mean, I think we're both very focused on what's going on over there, and yeah, it's actually kind of a sad thing. It is. Gotta, I've got friends that are still over that area right now, so it's kind of or its surrounding areas, and some were just deployed about 6 months ago. So it's kind of interesting to see how this is playing out.
Yeah.
Of course, I work on Fort Hood, so
Yeah. Well, thank you for your service too, sir. Okay, so what we got you on YouTube yet?
Let's see here. I'm just looking at the count.
Yeah, sign in there.
There's a couple. We got a few.
Another first kind of thing, if you guys want to ask questions, please put them in the Q&A section. If you're on the Zoom, in the chat, if you're on YouTube, in the comments. As far as the charts, if you want to send charts, hold on to probably midstream, start sending charts, because there's a certain pairs that I go over, and the rest I can analyze anything for you. But if you don't, close mouth, don't get fat, right? If you don't ask, I can't answer your question. And don't hesitate to ask any questions either. There's no shame in asking question, even if it's a beginner question, right?
You said, basically, make sure charts go into Q&A as well, so it doesn't get mixed up in the comments. So if you just want to comment, obviously throw it in the chat, and also YouTube, I will be getting to any of those questions as well. If it's something that needs to be demonstrated, I'll let Yuri know.
Yeah, and if you haven't become our friend or don't follow us, Ryan, can you put that on the screen?
Yeah.
Rad's gonna put our handles for Instagram, so don't hesitate to reach out, say hi, join our squad, whatever it is. We're available. And then last boot camp coming up October 9th. Me and Peter Nadnitsik partner up to deliver everything we got, right? So it's going to be amazing. There's one early bird left. for $100. The rest are $150. The bootcamp will be all day, as long as we can possibly go, to cover everything. Just the mindset will be like a couple of hours. So everything will be recorded too. If you can't attend, you can still register, and we'll add you to the group where the recording is with case files, everything will be. Bootcamp is not for beginners, Mr. Gary Baird, and you didn't listen. I told you to put questions in the Q&A. But luckily, I am not looking at the chart yet. I'm looking at the chat. So yeah, bootcamp is not for beginners, but you know, like also beginners is a very big spectrum, meaning like if you just learned what market structure is or what some indicators are, that's pretty beginner. Like if you know the basics of the market, like you know the basics of structure, you know the basics of smart money, you know the basics, the very basics of Wyckoff, you should be okay, because we will go deeply from the beginning, how to put everything together, how to enter a trade, entry protocol, exit protocol, trade management, risk management, liquidity inducement theorem. There's going to be elements of divergence. There's going to be order flow shift. There's going to be all 4 types of supply and demand. I mean, it's just going to be so much that I don't know how we're going to do it in one day, but we will try. Like I'm finishing my my part of the presentation, and there's a lot, but it's going to be well worth whatever we charge, $150. If you need the link is in my profile on Instagram, or you can just reach out, direct message me, especially if you can't pay with a credit card and you prefer some other method, you know, whatever. Students have their own discount, our inner circle and everything. All right, enough of this chit chat. Let's go. Let's talk about what happened. So last week was absolutely insane as far as the amount of setups, and I wanted to start out differently. How can we access the bootcamp? Yeah. So I just said at Lord Fury 83, go in my profile. You can click on the link. That's the only link in the profile. It will take you to the website where you pay, and it will redirect you to Zoom registration or give you the link for registration and for Telegram group. If not, just DM me and I'll walk you through it. Okay, so let me see. Am I sharing screen? I'm not sharing screen.
You are.
I'm sharing?
Yeah.
Oh, okay. Yeah, I didn't even know. So yeah, so Bitcoin is what you should see. So I wanted to start with crypto just to do something different. Because I traded Bitcoin on the weekend, but I traded on demo since I have 160 pips spread on my broker for Bitcoin. And I also am horrible at multitasking. But anyway, so I did this on demo, and it was just baffling. So the cleanest AMDs I've seen from the very beginning, like here on a Sunday, we had drop, compression, accumulation, manipulation, distribution, mitigation, taking the liquidity inducement perfectly here. If something's not understood, go ahead, ask. I'm assuming you know what I'm talking about, people on the call. Same thing here. Kind of a weird way, but same thing here, same thing here, same thing here, every single day. Like it just kept going and going. Then this one was just an easy, like a smart money basics entry. So you got, again, accumulation, manipulation, distribution, mitigation. So you could have gotten it here, but after this is just a normal complex pullback over here, right into the last point of demand. We break structure to the top and mitigate the very first order block here, taking out some internal liquidity over here. Just like no crazy manipulations, no hunting smart money traders, just nice retail FU, because they're looking for descending triangle for it to come down, if you know your patterns. But instead, it did the Judas swing and came back. Easy. And then I did trade this on, when I trade this on Sunday, yesterday, right? I get in right here, right underneath, like I saw what's going on. So typically what happens is you have some support resistance, retail traders wait for break and retest, and then this this retest has to get broken and taken, and the market will go up. But this was even easier because they left this liquidity on purpose, so I saw it, and then I just marked out the area, which is this wick right here. So if anybody who's been on my call ever tells me this is because it's an imbalance, I'm gonna smack them right across the face. If you haven't been, you're forgiven. But the market came here exactly because there is a mitigator orders in here. This was the manipulation, that the expansion of the market through this liquidity, and we came back to pick it up right here from this side, while taking out the liquidity that was sitting under here, right? And then we just coming up. So now, again, we didn't do really much. So it's very hard to do right now. It's Asian range, so we're probably just gonna consolidate and do another AMD and keep going up, because on a daily, we are coming to the source of this push, right? That broke the previous structure, that started here. So the last mitigation and smart money pretty much, or sorry, the banks pretty much got in here. So this is where I'll be looking for an order flow shift, which kind of looks like this for those who don't know. So something like that. Right, so I'll be looking for something like this. And you could try to get in here or here, right? If not, then we're gonna probably might find something in this extreme, but this makes sense to me a lot because we broke out. Yeah, why we didn't break this? Never mind. Did we? Yeah, so maybe, like I said, only with the order flow shift am I considering selling. If not, then it probably will go higher. But this is right now a scenario on Bitcoin that I can get behind. So we're far away from there still, but it's Bitcoin, so it could freaking get there within a day if it wants to. Anyway, so that was Bitcoin crazy opportunities. Euro USD was freaking clean and still is. So this is the pair that I'm looking for, number A on my list. And I went over like 10 times with my circle of for crypto, you mean, Fabio? So I opened up literally this weekend. I opened up Code Forex, is KOT Forex, and that one allows it. The spreads on Bitcoin is about 40 to 60 pips, so still a lot, but more manageable than 120, 160 on my broker. But Code Forex, yeah, I was able to trade on Sunday and Saturday and Sunday. Yeah, that's the one I know. So I know some other ones, but you know, you want Code Forex is definitely I think now is what's it called? Monitored and what's the word? What am I looking for? Ryan, help.
Like monetized,
No. Government looks
insured,
not insured,
FBAs.
man. Like man, what am I? Why? I'm sorry. I have-
Sanctioned, Federal Trade Commission sanctioned? No?
like regulated. Thank you, Gary.
Regulated.
Jesus, what the fuck is wrong with me today? All right, not enough freaking drinking. All right, so yeah, regulated. I think it's
Regulated
regulated already, but there's Yeah, I'm drinking it right now. It's making my throat dry. The damn Hugo run the other way also lets you trade on the weekend, but that shit, you know, the sketchiest scammers ever. So don't go there. And tell you that. FX Choice used to, but no longer they stopped it. So okay, Euro USD, yes. So the thing is, and this is very important, guys. So take notes if you don't know this. So last week, right, we were here, and lots of people get stuck on smaller time frames. They don't understand what's going on. They're stuck on time frames. I always start my analysis before the week on the daily. So on the daily, when we were entering last week, we were like right here, right here. And I said we need to take this because that is an inducement, right? Because we did not break this high. So that because we didn't break the high, we're still in this leg from here to here structure wise. And so if we didn't break and make a new high, that means we don't have enough liquidity grabbed to take this high, which means we need to create liquidity and grab liquidity. So we bounced the week before, and last week we grabbed it. So I'm just telling you a story from the daily, right? And we didn't quite make it to my house. So I think we're still not done, but we'll see. And knowing that, I knew not to get in a buy. At least not to get in a buy. And then what happened was I didn't trade it Monday or Tuesday, but over here, when Wednesday came along, we had the FOMC minutes at 1 o'clock my time, which is central, right? And this was a beautiful, beautiful thing here. So it did the same exact thing, but exaggerated that we did over here. Lots of people were thinking, first of all, we're bearish, right? On the daily, we're super bearish. But people get stuck on 15 minutes and see something like this and right away assume we broke structure. So, hey, we got an order block, last point of demand. Let's buy out of here, right? And I always say not until you see the order flow shift, aka schematic divergence, something in this area when it gets here. Can you buy this? There's no way you should buy this at all. And so when the market came here, we did the supply demand model of drop base drop, right? We took a pit stop, didn't really have reaction because the momentum was so hard and came down. Now, if you look at 4-hour time frame,
are you able to make your screen bigger?
well, like, okay, it's better. Is that better?
Yeah, there it is. There it is. Yep. Good.
Okay, can you remove our things here? Maybe it'll help as well.
Let's see here.
I wish there was a way to put them, pin them in the chat. Anywho, so if you look at 4-hour, you can see, do you guys see this? See, this is why it sucks because I can't get my tools. You see this wick here, right? You see this little tiny wick. Ah, Jesus. Sorry. Hang on. That wick right there. Okay. That wick right there is the reaction from this demand area. So once we reacted and didn't really do shit, we broke it. But there was still order sitting here because look how this is still a legit order block. Look how market went up from it. So that is the level of supply. And if you can see where that FOMC took this wick is right back to that supply. Now, it would have been hard to see during the stuff I'm just telling you, you know, post, I didn't trade this, but I'm telling you that it went perfectly right back into the supply. Okay, so it went into supply and went down. So right here, when we created the range, most people were trying to sell for retail. Right here, they were trying to buy. So we slammed the market up took out the stop losses for swing, for people that are putting their stop losses right above this swing little high, right? Took out all the stop losses for sellers, induced all the buyers to go buy, I'm missing out, buy, right? That gave them the fuel to crank the market down, take out all of the buyers, right? Over here. And this is where the golden opportunity for me, at least, was on EU last week, right? We were actually on our internal stream with Ryan, and we were right here. And I said, hey, look, this takes some bulls. I don't know what this is. Right. So this is definitely a bank that got in behind this move up, this manipulation, right? So if this is manipulation, and when we came here during Asia and didn't even take a pit stop, we're going to come back to this area. So you could simply put a sell limit here and, get lucky because you don't really know how far up it's going to go, really. Or you could mark this area as the POI and wait for order flow shift. So let's go there. Let's see how easy this was.
We gotta erase some stuff.
Yeah, I know. Been freaking over this chart 20 million times. Okay, so right here, I got mad. And I put a shit ton of trades. But over here, you can see. All right, let me clean this up. This is crazy.
I tried to erase our thing there. It wouldn't let me. Get this clear. An eraser and all that.
All right, I got it. All right, so hang on just a second, guys. I apologize. This is messy. All right, so this is all it is, guys. So this was my POI. Let's say this whole block, right? We got a low, a higher high, right? Then this low here, this order block here, that's a bounce. Come here, fail to make a higher high. That's why the check mark. We failed to make a higher high. That's step one. Okay. Step two is break this one that did make a higher high. We break it here. Boom. Step three, find the candle that led to the break of this low, which is this. And this area is the expansion to mitigate from here above the last point of liquidity. So the market comes here, you snipe, and the rest is history. Really easy. Really easy following your one of my protocol entries. Where the freak? Where is my, oh, see why I hate this, my screen. I can't see. All right. So sorry for my language here. So I snapped it here and took it all the way down to the end of the swing right here. See, you have my order. All right. So next day we came here, turned around. By the way, what is this? All right. This is your manipulation, distribution, mitigation, right? You could have AMD pattern, right? So could have entered here for a buy and stuck there for a while for this one. Now, what are we doing right now as far as EU? I think, like I said, this was the target. Once we started, we failed to break lower. We did create this. We did create the equal lows double bottom, and we came up to take out the liquidity on top of the SWIC from all the traders that are sitting here putting crazy stop losses like this. But where did the banks got in? Well, the banks crank the market up here, right? To slam it there, mitigating through up until here. So technically this whole area up to this wick is the supply area. So I just marked it here. I'm not putting a sell limit there. I want to see, just like this one, order flow shift over here so I can sell it. The big buy, if I sell it, it's gonna be profit all the way over here at 620. Area is my profit because I think that's where we're gonna end up. That's my projected target. That's where we're gonna end up to mitigate out of this manipulation. That on a 5 minutes, I'm not gonna go there, but that is where we still have it mitigated. And then from here, that will be a buy, on my opinion, that will target this high finally. So that's my story, sticking to it. Questions, comments, concern, disagreements are welcome. So Asia, Mr. Abdullah, is an interesting thing. I don't enter during Asia because Asian range is 90% time gonna get violated, right? So Asian range, you'd be like, oh, look, this is AMD. It's coming my way. All is great. I'm winning. And then London opens and takes you out. And you wonder why. So with Asian range, you got to be careful. So I wouldn't recommend it. I would wait for London open, see where the fake move is, and then go into the market, or look for order flow shift during or AMD during London open. Although I don't trade London, so that leaves me with New York. Okay, GU. No, not GU. US 100 was my absolute baby. We spent a whole week together. She is very nice to me. And I can go for another hour talking about how many trades I did on this motherfucker, but I don't want to bore you, so I'm just gonna go very fast through the same theory. I'm just gonna say on Monday, last Monday, I think it was Martha who asked me about to do a markup. So we were at Furious Monday right here in Asian range, and I did an analysis top down, and I said, look, I want the market to come down into this area, this yellow area. I know there's a lot of markups. And once again, you could have simply put a buy limit there and you would have been fine. In fact, my brother Ryan here did that. A couple more people did that. And luckily, they all made a 1 to 7 before the market turned around, right? Or, right, because market came here into this yellow box and went up, broke structure, some inner structure, whatever. Or you could come here and do what I do, and that is be safe, which is, look, this creates lower low, that fails to create a lower low, bounces, then we break structure here and mitigate. Boom, entry. Easy, order flow shift, awesome. So you could take the trade there. This I didn't get into, then I got in here, another order flow shift. Got a little one, but we're bearish, so that's just to come back to supply. So I took a hedge, went here, another order flow shift. This is perfect. This is my favorite pattern, by the way, where you have, let me draw this for you guys. So I don't bore you. Oh, Jesus. Okay. Sec. No, I don't need an alert. All right. So all it is when you have some kind of, let's say, order flow shift or no order flow shift, some kind of range, and then we violently take out the high, and then we bounce from, you know, break and retest. Essentially, we have the break and retest, right? Retail. Easiest pattern. Afterwards, it will come, take out the retail from that break and retest into the extreme, and then go up, making this move an inducement. Okay, so Nasdaq right there. Come back. And talk about where did I? Oh yeah. Nasdaq right here. Did exactly that. We went broke it, retest, right? Retest. Failed to break a high. Take out the retest into IFC. Nice little trade up. Okay. So then I didn't get into the trade until the next day. And this was the cleanest, the most amazing, the highest entry, unreal trade right here. This was the trade of the week for me. And then the next one on the buy after that. I was just smacking it up and down. So again, high, low, higher high. Higher low, failed to make a higher high. Break the low that made the higher high, right? First that where I can retest here, but then we come here, take out the retest, go straight into the extreme. Boom, smack it there, hold it. Could enter again right here, another order flow shift here, I guess. But I entered at the top all the way down, right? I got out here, it actually went lower. It went a lot lower. Next trade, another order flow shift here. But this was even without order flow shift, like this was perfect. The fact that, well, the order flow shift is here, right? So high, low, failed to make a higher high. Take out the order block that actually made this high right here. Went all the way down, then came back, took out this, boom. And as opposed to Bitcoin, this descending triangle went to my target, which is here. And all the way down to London. I woke up already in profit. And then perfect trade over here again. Just like how many examples? This is the same thing. Break and retest. Take out the retest and the liquidity into the extreme and up. Like over and over and over and over again. Like how easy can it be? And that shit is still going up. I mean, I already left and took profit over here, but that, I mean, it just keeps going, all-time high, like freaking all-time high. And as far as where it's going, my projected area is all the way at 15,541. I can't tell you how I know until you register for the VIP on Bootcamp. That's the only people I'll tell right now because I'm still researching this, but it's, if I'm right, this is the end, guys. Like I'm gonna go after the hedge funds and traders. But anyway, so that is where I think we're going. So all-time high, not much to do, but try to re-enter a buy possibly from an order flow shift somewhere here in demand. Not looking to trade it just yet. Maybe after tomorrow's market open, it's going to give a nice entry. Right now, there's definitely no entries at all because we're just too freaking bullish. And it's too late to buy too high. Okay, sitting on my hands on that. Gold was another beauty. But it was kind of pissing me off because it's going back and forth all week. So I hit a bunch of break evens on that. Even a couple of losses, I think, too. But you surprised? You didn't know I have losses? I have losses. It didn't get to my area either. I'm still waiting here. I have my house sitting here waiting, but it's not happening. This was an easy trade right there. Once again, the first reaction, this wick here just went up like this. Most people who are noobs or starting smart money, they will say, well, this is the slingshot candle that led to the breaker structure. So that's an order block. I'm going to wait here. But even Mike Azevedo will tell you, you need a schematic here in order to enter. And I will tell you that right there is liquidity because that's a wick. And in the grand scheme of things, we did not take out the high that holds bullishness. We just took out some liquidity. And because we didn't take out this high, that is liquidity. And underneath it is actually the order block. Why is this one relevant? Well, because it fully mitigated this here. And yeah, I researched in 5 minutes. And this is where the order flow shifted right in here after taking this. Instead of coming lower, we came higher and reversed. So this was an entry. And of course, that was an entry from the extreme. So another inducement, and that's an extreme, but you should have been fine even if you, this whole thing is like 10 pips, 10 points, I bet. Right, so you could have entered here or here and got a nice move up. And again, if you're interested in going up and down kind of thing. But I mean, today or yesterday, this is amazing that it didn't break this. Could have, I guess, entered. I know Peter entered somewhere here today from the clean AMD over here. Was it here or did he enter here? I don't know. I don't know where he entered. Maybe someone does. I could not trade today, so I'm okay. I didn't trade today at all. Just so you know, I was at physical therapy. And where are we going with gold? Let's see. What is this? Liquidity. So I'm not convinced we're going up. I'm not convinced we're going up. I think this is a giant target for me. And it lines up with all of this. So, but before we get to this target, most likely will come like all the way freaking here. Like all the way into this area, who knows? But right now, my first area that I want to even consider looking is this wick here. So on 4 hours, it looks small. But right here is the area where I'll be looking for an order flow shift. On gold, I would rather enter a buy right now if the opportunity presents itself in here or in here or even lower. We'll see. Not looking until tomorrow morning anyway. So, this is interesting. This is very interesting. I actually like this area a lot. Okay. I'm changing my bias. I really like this area. This is the range that we're in right now. So this reminds me of NASDAQ, that triangle that's gonna form. So I really like that actually. Like this, and I see this little area underneath as well. So be careful. Maybe split the position in two, and depending what they do, if you're doing limits, I would put 2 positions like this, you know. Just split the risk in half, you know, maybe. If you can spot, if you're trading live, much better because you could spot the order flow shift and just get in on that. But this looks beautiful right now and clean, beautiful and clean. And because we reaccumulated here in the demand, there is no need for them to come lower at all until they come higher and fill the imbalance at least. So this is a very good area to re-enter. I just noticed it. Yep. And this is also a breaker over here. So I really like this area.
Hey guys,
Well,
please
okay.
put your questions in the Q&A. It's hard to see them. I mean, I
Thanks,
can see
guys.
them, but it makes it easier. Thank
So
you.
this right here would be an awesome area to buy all the way to at least here. And if I get in a buy here, I will not take profit. I will hedge over here and see what happens. May the best man win. But this man, I almost want to freaking set. I wish there was a way in TradingView to like send an alert and like have your cell phone have an alarm like crazy, wake you up.
Yeah. That'd be good.
Cause this looks so freaking awesome and clean, guys. This could be the trade of the week if it works out. This is just beautiful. UJ, I only traded the ones that I went over. I still gotta go over GU. But UJ, this is where I'm holding my buy limits still. We haven't gotten there. I'm just waiting patiently in here. Why? Because once again, this is the last point liquidity that got taken here. Before all that in there. So this is the last point liquidity got taken there, and we took out this liquidity. So, this was a huge manipulation down and explosion up. So there's got to be a reaction out of here. Plus, they created this fake support here and here, support resistance. See how I have it? So most likely they'll come here, bounce the market over there. People putting stop losses there, take out the stop losses, mitigator there, and then explode. So that is how many pips? That is still 80 pips away for UJ. That's significant. So that's my only play on UJ that I see. If that gets violated, I'm not looking to buy it all the way to freaking over there. Yeah. And it's once again, right now looks very bullish. And we're in this leg technically, but we're doing a bunch of crap right now, right? This is horrible price action. As opposed to gold, this looks complete trash. Also, if gold is coming up, this has got to come down. So right now, I want the gold to come down a little bit so I can buy. This can come up, take out this wick, take out this wick, mitigate out of here. I'm speculating. I have no idea what's going to happen. And then come down into here and gold opposite, come fill the imbalance for the sell. Okay, so this, to me, this adds up. GU. GU, that motherfucker's bullish. It didn't do what I wanted to. But we'll see what happens because now I'm conflicted. I think it's going for this wick. So I think we're gonna take out this wick and then maybe out of here, come down lower so we can actually get to mitigate out of this area, this extreme. We see my line there at 135.80 and take out this low, then come back up, or we could just blast through everything and come way high, way up high, way like over here. So I'm confused with GU a little bit. I need to see more price action to see if they take out this wick, that then I would be looking for a sell somewhere. But I don't see clean entries, so it's kind of on the back burner. I did call this last week as well. Forgot about that. Worked out perfectly. Got in to take out this. So now again, like it could, yeah. I think it's gonna take this wick and go into this here, but this is just what I think is gonna happen. But I have no idea. This though on the buy side kind of looks interesting too. We go to smaller time frame. No. Again, like this wick, you know, any wick like this, to me, that's liquidity. So, it's just such a small time frame, but it looks exactly like gold. Is just it's all mitigated through kind of thing. So kind of feel like this is the only thing that stands out to me or catches my eye is this nice little area. But yeah, definitely not, no kind of, no, what's it called? no limits of any kind. No limits of any kind. Only order flow shift or AMD or break and retest, like something obvious that I can trade, right? Right now, this is just garbage. And then AJ, I wanted to, there was a couple of requests for going over divergence entry. Last week, we did divergence overview. And I wanted to, this week, to demonstrate how you enter. And last week was really bad, except for this one that I found, meaning like there was no clean divergences. Everything was literally diverging further and farther. So there was no correlation to find divergence in, if that makes sense to you, right? So when pairs are correlated and then one diverges, you can see it. But when they're all completely chaotic, don't look like anything, there's no point in looking at divergence. Like you can't, they're not the same. So the only one that I saw, like I said, is NZD JPY, odd JPY. And it's pretty clean divergence here, right? So we see both of them coming down. You guys see that? Coming down. CHF JPY. Haha. Okay, I'll explain to you. I see the YouTube question. I'll explain in a second. Let me go over the entries. I'm going over a lot of things today. So you guys see the divergence, right? Jesus. Oh, it's on the same chart. I'm like, all right. So we were coming down, right? Coming down. Boom, 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 coming down. You can do a smaller one here. We're just coming down heavily. And all of a sudden, this one turns around, NZD JPY. So how do you enter and take advantage of that? There's two entries, always. I need to go NZD JPY. So there's, like I said, there's like a ton of variations of divergence, meaning like there's one that broke structure that's safe. There's one that, which I went over briefly last time. For those of you who missed it, review the last video on YouTube. Why can't I see? Oh, okay. Right, so here we saw it diverged right there, right? It diverged into here. So there's two ways to enter divergence. Way number one, which is my favorite, that works 90% of the time. In this case, it didn't. But my favorite way is when the candle, the last candle that caused the divergence, in this case, it's this one here, this black one. When this candle gets engulfed fully, you enter right after the engulfing candle closes. Now, it doesn't have to be the very next candle. It just has to be a candle that closed above the lowest candle, right? The candle that made lower low here, the lowest candle here. And I specifically went to 5 minutes because there's a giant candle on 15 minutes. So 5 minutes, it's here, right? So which candle actually engulfs it, which would be this one. So after that candle, you place your your entry here, and your stop loss. In this case, it's kind of ugly, this entry. Stop loss here, and then you're targeting, on 15-minute, on 4-hour, let's say this. Or maybe you want to target this or that. The second entry is always the order block that is lower. Oh my God, I just saw the inducement. Fucking awesome. Which is the order block lower. Where is the order block lower? So we entered here. And of course, the order block lower is right there. So you always put two entries, one after the engulfing candle, one after here. Now, it's not the cleanest example. Like I said, last week was this. So essentially, what usually happens is this. So one pair takes out liquidity, break structure, mitigates. So you got this divergence going. Other pair makes a lower low. Doesn't matter if it breaks or not, and makes a lower low, takes out liquidity. So it keeps going lower, right? So when this happens, you switch to a small time frame on, or if you're already on small time frame, stay on it. When the candle gets engulfed, the one that created this divergence, the one that had the reaction, you get in as soon as it closes with stop loss underneath it, right? So your first entry is here. Your second entry is in the extreme underneath. Hope that makes sense. So those are the entries. That's how you enter divergence. On the side that is a leader, meaning the one that's already mitigating. All right, now let's address some questions. Okay. Oh, Jesus. I was checking out Bootcamp Mansion at the beginning on the Instagram page. It says covers LIT. LIT, liquidity inducement theorem. AMD, accumulation, manipulation, distribution. CAMD, compression, accumulation, manipulation, distribution. Sorry, mitigate, yeah, manipulation, distribution. And then there should be another letter, but I didn't want to make everyone hurt. It's technically this. Right? Because the mitigation, that little m, is where you enter. Compression, accumulation, manipulation, distribution, mitigation is your entry. So, okay, so that helps, Monique. That's what it covers. So inducement is like literally number one way to make money in the markets these days. And without going too much into it, because that's what the bootcamp's for, explaining all that. If you have some kind of impulsive market, let's say, and then all of a sudden you have a reaction, right? It has a reaction like this, and it breaks some kind of structure. Maybe this was coming out like this. Stop, right? And this broke some kind of structure here, right? Everybody thinks, everybody meaning smart money traders. Jesus. Hang on, sorry. Everybody thinks because we broke structure here, right? And let's say this whole area was like moved down to go up and it hit the top of the candle or something, right? We broke structure that the re-entry is right here. But in 90% of the time, this becomes an inducement for early buyers, right? And then we either create or we don't create. Most of the time we do. The little, oh my God, my mouse is crazy today. Need to clean it. Create some kind of range over here, right? And then we come down, making it look like we're going down, but in fact, we're just taking out this original buy, mitigate out of extreme to go up. So that is inducement theorem, right? Because first, what they do is they take out the traders who are break and retest traders. And second, they take out smart money traders that are, just thinking mitigation, great, break a structure, great, let's go. They take them out too. That's why sometimes you see for people that are just learning smart money, it's like, man, I did everything they said. I put my order block right under liquidity, under this W, whatever. This was a perfect setup and it took me out. No, this is where retail shops. This is where they put stop loss. This is where you're supposed to enter. All right, so hope that made sense. As little as fast as I went. How do you compare charts? There is this little plus over here, right? Oh, Ryan already answered, sorry. Compression is different from accumulation. Okay, so compression, let me show you in the market, right? So let's just take Euro USD for instance. All right, so I want to find, so right now this is compression. So sometimes you have cases where it's like this, right? Boom, boom, and then we're accumulating. That's the whole accumulation. You can see that market went from being like this to being flat and compressing here, and not compressing and accumulating here. I'm sorry, right? Flat. So the direction is like this. When it's impulse, maybe some kind of reaction, and then a range. That is AMD. Because now you got this range, that's your accumulation, then the manipulation, then distribution, then mitigation. Whereas compression is when you have an impulsive market, and then all of a sudden you start compressing. So these impulses become smaller, 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 and then you turn into accumulation. And then at this point, you can either go up or down. And that's the $1 million question. Is it a reaccumulation or distribution, right? In Wyckoff. So that's where the KMD comes from. Because the market is compressing and then accumulating. So we're no longer moving like this. We're now moving like this diagonally before reflattening. All right. Hope that makes sense. Yep, there you go, Fabio. I'm assuming you're talking about what I just said earlier about inducement. Compression, change of character. No, change of character is what creates the range in the accumulation. That is what changes the character from this to that. So that is basically Wyckoff beginning, right? Change of character. And that is exactly what AMD is. Instead of doing all the secondary tasks, UT, blah, 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 ST and phase B, signal of strength, signal of weakness. Instead of marking all that out, you just understand that, hey, this is my range. We're accumulating or distributing. And afterwards, we're going to manipulate, distribute, and mitigate. All right. Awesome, 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 awesome. What else? Did I miss any questions? Sorry, can't see wide in the screen. Oh, sorry. CHFGPY, yeah, comment there. When in divergence, whose direction should I take? The one that is diverging, that's the one you should take. So simply, right? If you have one pair coming low, the other pair coming low, they're both coming down. You're in the downtrend. Right? You don't want to go against downtrend. That's catching a knife. Do you like catching knives? I don't. Right? But if one of them does this, changes direction, shifts the order flow, man, this is becoming super dirty. I'm gonna have to delete everything right now. Sorry, Yuri. You'll have to redraw everything later. So if one of the pairs goes like this, it's telling you I am no longer interested in making lower lows other than inducement and stuff, so be careful. But it's basically, well, this is why there's two entries on divergence, right? Because it's all confluence together. If that's your divergence and you enter here and all of a sudden you fail to break this high and start like consolidating or coming down, then chances are you're gonna get killed here. But you might still be okay because it'll come into here and then come up. But 90% of the time, if you're correct, and this is indeed divergence and you got it correctly, it's not going to come lower anymore. It's just going to explode. So the one that's diverging, that's the one you want to take. You don't want to take the one that created another lower low. Where are you going to take it? Like try to take it here, like it makes no sense. So definitely always the one that's the leader, the one that's doing it first.
Yeah, eventually you could take that second pair only when you're only when there's confirmation. So when it finally is done taking liquidity and then makes a higher low, then you can get ready to take that second pair because now they're in confluence. rather than against each other.
All right, that's our name of the company, Texas LLC. That's also the name of our YouTube channel. So if you go here, subscribe, you're not gonna miss any more live videos. And if you want to see past videos, you go under live recordings, not under uploaded videos, but under live recordings, you should find all of them, okay? So go under, you go to our channel's videos, and then there's gonna be a drop down on the top, and you select live recordings. It will show you all the recordings. Okay.
I got you right over here. Here's the link. There you go.
Okay. Go to CHF JPY. Yeah, actually CHF JPY was a pair that one of my students was asking me about this weekend, so I might even have a markup for it. Boom. I'm gonna drink some water. 1 second, guys. Oh yeah. The nice, beautiful takeout of my original markup on Monday. Yeah. That's another thing, guys. If I were to give today, if like I already gave some markups on EU or what I'm thinking, gold and all that stuff, and nothing happens till Friday, yeah, price action might have changed by then. You understand? Like you can't, well, you decide to get in there. Yeah, well, you gotta figure out what the market is doing first. I mean, this was perfect. This is, again, this is another inducement. All it is because everybody, oh, look, this is Wyckoff schematic 7. We have a diagonal line. We have a signal of strength. We have a spring. We break it, and now we're waiting for the test. Wrong. That is STE phase B. That is a spring. But you don't know that until later, right? But what if you look left? Look at it. Look at what happened. Look at where it's at. Right? You forgot about this. Why did it come here? Ask yourself a question. Why did I get stopped out? Why the fuck did it come here? The answer is this is where the order flow shifted over here and never retested. High that created the low. Lower high that failed to break the high. It broke this and never came back. So there's 2 places it can come back to, here and here. But you don't look left. You're stuck at 15 minutes and you think you're fine. That's why. But when on Monday, I can't, necessarily see it always if this is not my pair also. So that's what's going on. So my prediction is only going to be based on higher time frame, and this is it, right? It's all she wrote. So now we're going up. We are at least gonna go up to here. This would be the first area I would consider selling this motherfucker at. All right, so we have bounced from here. So I won't be surprised. Wait, let's see. Oh, this is nice. Wait. I see something. Oh yeah. Oh yeah, that looks good. This would be freaking amazing if it does this. This would be just beautiful. You see this? Asian range took the high, didn't take the low, have the liquidity under, and this thing where it exploded from. So again, we just took out this one, bounced, and switched order flow here. So 119.50, it would be my entry if I were trading this pair. 119.50, okay, for a buy. That's where you should enter the buy. Like, I mean, I don't know how many confirmations you need. You know, you can go by 78.671 kill zone. You can go by the fact that it's a half level 119.50. You can do whatever you guys. I just see liquidity and I see order flow shifts and where we at. So in order to enter a buy, I don't want to enter anywhere here. All of this stuff is liquidity. There possibly might be a reaction out of mid Asian range here, but I don't see much manipulation. I just see price coming up and that's it. So that's going to be a very iffy entry. This looks amazing because this is the reaction that broke this high. This is where we like, you know, skyrocketed from this place, left footprint. I mean, this is perfect. So if I were you, I would either put a buy limit. This is what, like 190.55 to 46. That's like 9 pips. If you want to be super precise, you can enter at 119.50 with stop loss 119.46, like 4 pips. Put a house over here, whatever. I don't know your trading style, but that's my buy entry. On the sell entry, what you want to wait is order flow shift as well. Right now, you are in a range. So we technically, this is the order block from which we made the high. So for an order flow to shift, you want this to be broken. I would, you know, it depends on your trading style, but there's also a possibility we'll clean out this immediate liquidity here and come to the extreme and move higher from here. That's also a possibility, but I wouldn't bet on it. Like, I would put a research position, small position here if you want. But you know, it's like, just because this is the range, right? But to me, first reaction always gets screwed. That's your first reaction. That's your buying climax and the automatic rally. Sorry, yeah, automatic rally. So that's gonna get grabbed. So most likely it will come down and break this order block, come back either to here or to here, mitigate, and that's your Wyckoff distribution. In my opinion, that's just an order flow shift. So you can make your way down underneath here and hedge a buy, and then you don't have to trade anything else for the rest of the week. Because then it's gonna go, like I said, on the 4 hour at least over here, which is, you know, from here is like what, 130 pips on CHF JPY. So you gotta what, risk 4 to get 130. What is that? Like significant, like 1 to 40 or something, right? Yeah, 1 to 35, 1 to 40, like crazy, right? So it's a good trade. Good trade. I like CHF JPY. I might need to trade it. I don't like seeing good trades on not my pairs. But hope that helps. You come to the boot camp, Kaka. That's funny. You come to the boot camp and you know how you know inducement from not inducement. Or you join Furious Snipers and I will personally explain it to you. Asian range, it's an indicator, right? It's called Asian Session High-Low Midlines by, who's it by? Who's the guy who did it? Marek Meyer.
Yeah, it's the
Right.
top one. It should be, yeah.
Asia, not Asian, Asia Session High-Low Midlines. And then I just got rid, yeah, so it does the it highlights the Asian range right here. And the funny thing is, if you know about Frankfurt and Hong Kong and all other markets, you could just, you know, change the colors, and doesn't matter what the name is, you can put the session from any time to any time, and you can mark out other sessions as well. But I'm too lazy for that. Ain't nobody got time for that.
Or you could even just do the sessions with the colors. Like Yuri, if you look at it, see his the blue, purple, and pink. You could do that too, just for Asian. You could just highlight Asian if you want.
Did gold ever go bearish in your opinion from 17th of August until 20th of August? 17th of August, 20th. Absolutely not. 100% not. So this is, man, I hate to like be telling you this on the call. This is why you need to attend the boot camp, because we will go over all of this. That right there, my friend, is nothing but a complex pullback, right? So complex pullback, meaning it's not a pullback, but it's complex pullback. So this is normal pullback. That is a complex pullback. The point is that is the lag that maintains bullishness, because this led to break of that and formed that triangle, right? So this high here is greater than that high, and this high got created from this low. When you come here, did this high make a lower low than this low? No. Did this high make a lower low this no? No. Was this low broken? No. Then why the fuck do you care about what's going on here? That's not anything. That is just a complex pullback perfectly into the order block here. Okay. Good question. Good question. I like it. Any charts, guys? Oh, I think I wanted to go with Euro GBP as well. Someone sent me a question about that. Yeah, I think Euro is still going to be bearish more than GBP, especially since you saw my GBP and EU analysis. Right now, we're on a retracement, so I think we're going to come here. And to be honest, I like between two, I always take the higher one. So I like this area. And I do think this is an inducement. And I do think that's the smart money trap, because I saw today in the chat, like 5 million people saying, oh, this is where I'm going to sell. But like, first of all, if you look at higher time frame, what is that? What's that? It's a wick. What's a wick? Somebody see that? And what I show you like 20 times on NASDAQ, that is a break and retest, meaning all retail is here. They sold, got their 1-to-1, 2-to-1, whatever. So we come here, we either make a range, then take the wick, come down, or most likely come to the wick, bounce just a little bit, or completely go through it, feel this imbalance, go to this candle and sell. So that's my Euro GBP. I do believe it's bearish because Euro is weak as hell and GBP has been showing strength. So it's just, again, my story sticking to it. We did not take this wick yet. We did not take all this liquidity. We're not done moving down. We're just having a slow retracement. Could it just come here and come down? Absolutely. But it's not for me. You know, I no longer give a crap about missing out. I miss out all the time. I seriously don't give a shit. Like, there's market so much opportunity just on NASDAQ alone. I can freaking make 100% this week. Who knows? But I think we're coming over here. So that's the area that I want either order flow shift or even an extreme from this area. Ooh, pink. And then we're coming way down below. Like this is the first area where we accumulated, or I should say reaccumulated. So as Mike would say, I'm looking for a schematic. I'm looking for an order flow shift right here. Order flow shift over here, or an extreme entry from right here. Yep. So that's a sell for me on Euro GBP. How Joshua. Okay. How do we look for AMD? I mean, some are clean, some are not that easy. It's like, how do you look for Wyckoff, you know? You just start looking for Wyckoff, looking for price action. So what you want to see, you don't want to have an impulsive market. So you start looking for AMD when the market is in consolidation, right? So you had this giant impulse here on Bitcoin, and then market is doing this, right? So a lot of times AMD and order flow shift happen at the same time. The difference is when you have an order flow shift, you need the reaction from supply to not break this and then break that. With the AMD or KMD, you need either A, break and retest and then take out the retest, or you need a long range and this come down doesn't have to have a retest, and this come down happens at the end of your range. So like this, right? You had boom, and then you this first reaction, Jesus Christ. Trading View is giving me a heart attack today. This first reaction and this first reaction, these two wicks is your range. So you know, but this is more like a, you know, it keeps coming down. So if it keeps coming down, playing with the lows and highs are intact. You wait to see until, so you see how this range got broken, this range got broken. So we're coming down, playing with the lows. Why are we playing with the lows and leaving the highs equal? Duh. Why are the highs equal? What the fuck? And here we just peek through it, peek telling you where they want to go. Because we're picking, taking some liquidity out, but not much. When we come down, it's like we're keep stepping by step, you know. Wyckoff, right? Settling climax, secondary task, and base B, blah, blah, blah. Signal of strength, right? So that signal of strength is what you need. It doesn't matter what you trade to me, right? So like you need the break to the other side to be significant and a close. And usually it's not always, right? Nothing is black and white. Manipulation is not always clean like this, but you need a manipulation and then a boom, a significant go away from it for a distribution. And you can see the perfect meant Quasimodo, right? Last point of liquidity here comes right back to it. So that's your entry right here. But you could enter either at supply and demand or at extreme. All right, so after the impulse, you got accumulation, manipulation, distribution, mitigation. Well, actually, this happened earlier. I'm sorry. Mitigation. All right. So, and then it did one more fucking inducement over here. Left this liquidity on purpose to come lower than this wick. Right, this wick had to be taken as well. Anytime you see long ass wicks, chances are it's gonna get taken. All right, hope that helps. GJ, let's look. Oh my goodness. Okay, so no, I don't mean to be mean, but holy crap, dude. What is this? Like 25 pips? What is that? Yeah, but that's insane. Stop. Why are you trying to sell over here? All right, GJ 1 hour. GJ. Why are you trying to sell there, my brother? What about this tells you we're bearish? This? Oh, that's a question, seriously. No, I got you, but okay, so I understand that's not your stop, but you were entering right here. Like, what the fuck, Chuck? Let's see. We got. So look at this, right? So this is what I did, I think, last week when I was saying. We haven't come there yet. This is the extreme of this lag, 148.80, good entry. Why do I think that? Well, because we're still overall bearish, so you are correct in this analysis. But right now, order flow is still bullish. What do I mean? Well, look. Where is smart money getting in, right? We're manipulating this. We're coming in here. Boom, we break structure. Boom, 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 boom. Come here. From supply, again, come down under this. Smart money, get in, boom. Coming back. For some reason, bounce of some kind of supply there. Take out this wick, right? Come wick to wick here. Get in, fail, right? Fail to make a high. But where is my low that created this high? That low is here. This low created this high. So not even the order flow shifting until we come here. When we come here, and let's say mitigate or something like this, I'm just speculating. Then you can come back into here or into extreme to sell. If you're trying to sell right now, this is our first reaction. This is your range. Where is retail trading? So ask yourself, where is retail thinking support resistance? Right? Where do they think support resistance is? Let's see. Well, I think this is a pretty good line right here. Oh shit, what a surprise. Okay, so if we are at support and resistance right now, right? If we're at support or resistance here, or here, why are you trying to do what everybody else is doing? Right? If we broke this and we're bouncing and they're doing break and retest, they're gonna buy here, and then the next level is here, then this will be their stops, this will be their stop. So, you know, it's gonna come higher. So, but in any case, right now we have this imbalance here and the manipulation there. So Asian highs that are not taken yet, like, I think it's gonna keep going. I think it's gonna keep going up here. And if there's an order flow shift in this area, maybe, but honestly, I don't see the shit turning around. I see it's going up for a while. But in any case, to turn around, this is what you want to wait for, a break of this order block. Because otherwise, we're just in this range here. We're just in this range. That's all we are. But the structure, as opposed to order flow, let's see. This created that. Did that break this? Did this break that? No, we're in this lag, and that is what maintains bearishness right now. You're in the middle of the range. Why the hell would you sell here?
And that 151 level is going to be taken, or at least addressed.
Yeah. So it could come here, maybe, and hold, but that's a very big maybe. Because there's so much more upstairs. And this might not even be a legit structure, and a higher time frame will take over. But this is definite no-no. That's a definite no. We're in the middle of nowhere. Like, if anything, what I think with the range like this would be a smart move, a little bit riskier, but a smart move into here, right? And buy from here, because that is the inducement. Somebody asked me what's an inducement. That is an inducement. Right? Because this is what is this? Break and retest. Fail to break the high. What do we need? If we fail to break the high, we need more juice. Where are we going to get more juice? Right here. What's more juice? More money to break this high. Now come here, break the high, come into here to move higher. So do not sell this. Thank me later. I take tips. Hope it helps. All right. Yes, you are correct, Mr. Naj. Not necessarily though compression. Oh, never mind. Yeah, not necessarily compression. Because Wyckoff can start differently, right? So change of character is a change from being bearish to being sideways, ranging. So you could have a Wyckoff that is like, you know, taking lows, taking lows, taking lows, and then all of a sudden just starts this. There was no compression, it just started doing that. Or you can have Wyckoff that is actually compressing as it's coming down, and then just does this couple of times and boom. And then it's like diagonal Wyckoff type of shit. So then you changed into compression and a small accumulation. Change of character is simply the first reaction, big reaction, and the second reaction. So you're selling climax to automatic rally or buying climax to automatic rally. That's all it is.
And don't let the time of day confuse you either. Just because they're losing momentum moving sideways and it just ends up being the end of the day or Asian range, there's not a lot of volume in the market anyway. So that's not a true change of character.
So yeah, you gotta also, like Ryan said, you gotta figure out if the banks are part of the story here or if it's just no momentum.
Right. If it starts doing that in the middle of New York, you know, like between 7 and 10, things like that, that's something to be take note of.
This was the bank inducing sellers. Met with momentum, then they went home. All of this is bullshit. I mean, retail traders. Okay, other charts, other questions? Got about 10 more minutes for any questions. If not, I can give you time back.
So let me go look back at nothing on YouTube. So
all right. Okay. No more questions. I hope you enjoyed the session. If you got any value, type some ones in the chat. Appreciate it. Ryan does too.
Absolutely.
Can you trade only the legs of structure? What do you mean? No, absolutely not. You can trade other things too. The legs of structure, the extremes of the legs are usually the best sniper entries. Those are the entries when they work out, they give you 1 to 50s, 1 to 30s. And the other things you can trade is when you have a momentum retest, right? You can trade this thing that happened on Euro USD. I already left it, which is what I traded. This is not the extreme of the leg. Oh, I'm not showing the screen. Hang on. Right? This is what I traded here. I got in over here and went all the way to this wick. Right? This is back to supply. And the reason is that's where the manipulation happened. And if you notice, we just went through it like through butter, like there's nothing there. But these orders got taken back over here. So you just need to know the supply demand interaction, and you need to understand how the actual manipulations work. And it takes time and practice, no matter how many times I will explain it to you. Until you start being on the charts, you're not going to get it. I'm not sugarcoating. Check US 30. Yes, let's go to US 30. What is it doing? Dirty 30, where you at? Oh yeah, we're fucking bullish like crazy. We're just following NASDAQ. Oh, Friday, what a Friday if you trade US 30. I mean, can it get any cleaner than this? Look, guys, like I already said many times, look how simple. Watch. Or this, right? And I'm on 15 minutes. You can go on 5 minutes, see it even clear. Low, lower high, fail to break, mitigation, entry.
There we go.
Like
Perfect.
so freaking easy. Inducement in between. Like it's just, I mean, not that it's easy. I shouldn't say easy. Trading is not easy. It's just setups are there, and you gotta have conviction and believe in yourself. Like, okay, well, if I was wrong, okay, fine. I lose one trade, but was a setup there? Yeah. Like, okay, so if I lost this and it just went through like butter, guess what? This shit's coming back from the other side, and I was
You're
wrong, and I'm
selling.
gonna enter the other way. Yeah. Like,
And then order flow continues. That's the only difference. See? If they
Just
lose
gotta
the trade,
watch.
it confirms order flow continuing.
three questions that I ask, right? Where is liquidity? Number one. Well, 4 questions. What's structure doing? Bigger time frame. What's structure doing? Where's liquidity? What's retail doing? And where did the banks get in? That's it. That's the 4 questions. You answer that questions, you know where to enter. There's no freaking point. Like right now, nothing here, nothing can stop the price. Everything's clean here. There's no manipulation anywhere in here. So what are we doing? That's where the money is, baby. That's where your 30's coming. Tomorrow, all-time high. So what should you do? You should look for an entry on a buy after market open. That's the opportunity you'll get. And right now, I mean, this looks pretty clean here. If we can get all the way back here, which I don't think we will, but who knows? The last point, I mean, this whole move down, let's see, this was the manipulation. So I mean, this is the area where you should look for an entry, but it's so far down that, again, like there's no point in trading right now. Like no point in trading at all. Or London. US 30, if you know anything about US 30, every freaking day during the open, it will make a fake move. One way or the other. It will go for either London open or mitigate out of London every single time. So it gives you opportunity one way or the other, just like NASDAQ. I just like NASDAQ because I like how it moves better. It's more violent and more volatile and not as choppy. NASDAQ. To me, I don't know. I might be completely wrong. But with US 30, you got to look for the same things. Got to look for AMD, got to look for like how easy this shit, like I just opened it and I was like, oh, Friday was an excellent day. But you got to understand that not every day is a good day. Like Thursday, there was no business trading. You had no business trading Thursday unless you want to trade every move, which is what I do on NASDAQ sometimes. And you can see break and retest and trade that, trade the inducement. Like you could, but why would you stress yourself, have a heart attack? This is an easy entry. Could you miss out and could it fucking go over here without coming down? Yeah, absolutely. Who cares? Like missing out is not losing money. It sucks, but whatever. There's other entries. This entry was just textbook, like easy. So easy. After that, it never gave you I mean, this kind of re-entry, but just sucks. Like
Too
the
far
rest,
away. Your your risk to reward is not good there.
yeah, like you could have reacted here like this. You could, yeah, it's just not clean and nothing really like this is not what you want to see in the market is bullshit. And this is because it's Sunday, right? So today, this is not what you want to see. Like we didn't do anything today.
No.
There's no manipulation anywhere. It's just people buying and Moderna and fights are going up because of the FDA approval and, you know, just stocks being normal. But this is what you want. You want manipulation, mitigation, bam. You want change of order flow, take out the inducement, boom. Like that's what you want. And usually, like if you look, usually this type of shit where, and this in this case happened in London, but most of the awesome entries, like look at this entry that I marked up on Monday here. Open, right? Market open at 8:30 my time, comes straight to extreme over here, which was the last point of liquidity in there, which is exactly what the character changed. Like the character changed, the order flow changed. You manipulated, went up. Not here. This is where it was supposed to come down, but instead it went up. So left giant, you know, equal lows, and then bam, right into it. After market open, like you have half an hour in this case. In NASDAQ, usually you have an hour or two before it starts mitigation. So it's just a matter of patience, guys, matter of patience. Yes, but German 30, yeah, Fabio, I'll repeat in a second. German 30 closed for some time. So there's like a whole, man, last time I looked at German 30 was probably 3 years ago. But yes, it does look a lot like it, but there's holes in it. Because it like freezes for 6 hours a day or something like that. And maybe it doesn't, if I remember correctly. But yeah, what I'm saying is German 30, if you want to trade that, no problem with that. You want to trade divergence. So on German 30, you'd compare the US 30 and German 30, right? And when they diverge, you would take the one that's diverging. So it's going to give you better return on your money if you can spot a divergence.
Right now they're locking step.
They're pretty the same. They look pretty similar. There's nothing. Well, yeah, 5 minutes. Hang on. This pair moves fast, so you gotta go to small time frame. Come on, give me one example that I can show this man. Yeesh.
Right. Oh,
It's kind of,
Kinda.
this is a hidden one.
it's
So that's
tight.
the hidden one. This is the hardest divergence to spot. But basically it's with that in between. But we're not going there. I want to complicate people's lives. I want to simplify them.
The brains to mount.
Here's one,
That's a good one right there.
I guess. So in this case, you would buy German 30. Because we're coming down, kind of coming down.
What you do is you wait for the confirmation of the break of the upside. If you want to be completely conservative, or you can just take that mitigation.
But yeah, German 30 is just like, you understand the concepts are the same for any pair. German 30 is just like US 30. Like, it's just like, if you want to trade both of them, then you do divergence and trade the better of the two. If you just prefer German 30, there's nothing wrong with trading German 30. But German 30 is a lot like US 30 because dollar rules them all. But still think it's German companies. But it's more fundamentally affected because you have companies that are both in Germany and United States in part of the index, right? If like you need to see what weighted stocks, what's weighted average of each stock in there if you want to get into fundamentals of why. But if you look, like, for the most part, they're identical, Josh, man, join the club, man, join the team. I'll teach you how to see them. Can you repeat the 4 questions? Yes, 4 questions are: what is structure doing on a higher time frame? What's the move? What's the bias, right? Second question: what is retail doing? Where is retail? Or that's the third question. Third or second question, whatever. Next question is: where is liquidity? Very important. Where is liquidity? Are we being induced? Is it coming up? Is it equal highs? Is it the wick? Where is liquidity sitting right now? Right? And where did the banks get in? AKA where did the order flow shift? Like, we all know that banks get in at the very bottom or at the very top. Did they mitigate yet? Did they not? Right? So those are the questions that I always ask myself at all times. Like, at all times. And they're the most important questions. Like, you don't want to sell this at all.
Gambling.
Right? You don't want to sell this yet. Unless you're trading every shift, which is okay, but then you're Reem, right? If you can be like Reem, don't ask me who that is. If you don't know, it's okay. You don't want to know. But that's just like highest level of trading skill, to be trading every turn. I'm not there yet. So if you're there, congrats, you're awesome. But I don't recommend for people that, if you're not consistently winning with the bigger picture trend, then you shouldn't start trading every move.
Yeah, don't counter trade.
Yeah, only if you're consistently profitable pro trend and understanding how market moves, only then you do it.
And understand.
Yeah, Josh. So I'm not the person, I'm not the mentor who will tell you that everything's easy. I know it looks easy, and it is, especially hindsight. I'm not here forward testing and trading in front of you. Life is much harder, but that's where understanding starts, by coming to the chart, back testing, understanding. If you get stopped out, most people just like, oh, it's okay, let's not concentrate on it, let's go and move on. Me, I go and I figure out, what the hell did I miss? Why did I get stopped out? Did I get stopped out because I messed up with the higher time frame? Get stopped out because the broker screwed me over? Did I get stopped out because why did they react there and not where I thought? Like, you need to figure those things out. So on average, when I am not like slammed at work and all stuff, on average, I probably spend, I don't know, 12 hours on the charts outside of teaching and outside of trading, just back testing the hell out of it, measuring and like learning, like just, like, because I want it to be to where I just know. And you never know, but I just know, and I see as soon as I watch the market, like, you can see me analyze this, and like, it's easy because I know what to look for. And the biggest thing, guys, totally biggest thing, and be honest with yourself, is sticking to your damn rules. Like, last 2 weeks, I stuck to I have 3 entry protocols. Come to the bootcamp again if you want to know what they are. 3 entry protocols that I always follow. They don't change. If it's not there, like if I'm looking for order flow shift, if we didn't have 1 failed higher high, 2 broken order block, and before that, the failed higher high didn't come from reaction from the last point of supply or demand, the last order block, I don't take the trade. Because that's not a true order. Even if it works out and I miss out, it doesn't matter. It didn't fit my criteria. You have to be honest with yourself. I devised several strategies for blackjack. Newsflash, I gambled for shit ton of time before I even started trading. And in there, it didn't matter what I thought is happening at the time or how many cards came out with counting cards or whatever. I didn't matter. What mattered was in blackjack, I'm saying, what mattered was my strategy. I had my strategy, and it doesn't matter if it doesn't seem the right move. I stuck with my strategy. That's the only thing. If in your trading plan, oh shit, I hear my echo. If in your trading plan, you are trading 0.5% to make 5%, 1 to 10, whatever, then you trade that. And even if you lost 5 times in a row, you don't let that happen. Let that, unfortunate streak limit your potential to on the 6th trade go and double that. Because what people do is they get humbled, is they reduce the lot size, and now they're not going for 0.5%, they're going for 1/4%. You just made it twice as hard for yourself to just get back to break even because you messed with it. You know what I'm saying? Because you didn't follow your damn rules. Which is why it's important. I love Mike because of that, because he journals every freaking trade. He has patience to wait for months with trades, like all these things, right? I am not there yet. I'm not that disciplined, but holding yourself accountable is what it is, man. And the more you do it, the easier it will become. It will come, dude. Like, confidence comes from repetition. I am not afraid to lose, ever. I lose every single day on a trade-to-trade basis, but I make money every single day. Almost never do I not make money because I understand it's part of the game. You know what I mean? There'll be a day that I don't make money. There's not but at the end of the week, I'm still okay. My equity is fine. I mean, that's just it. Like, because I right away I figure out what it is that made me lose. But if you're just guessing or gambling or doing this, hey, I think it's gonna go. No, think doesn't matter to the market. That is not an analysis. That is you drawing some bullshit on the chart, thinking that market for some reason cares that you drew it. You know what I mean? That has nothing to do with anything. That is actually what they prey upon, right? They want you to do this. If you don't understand what's going on, like, how are you going to be profitable? Which is why it's important, I think, to be an analyst first. Understand what the market is doing before you place a trade. And for that, this is a tip for you guys. Use research trades. I'm gonna patent that. I'm gonna fucking trademark that, man.
That needs to be one of your t-shirts.
Yep, it will be. It will definitely be. Guys, spoiler alert. We're gonna come out with Furious Snipers merchandise soon. But it's gonna be on a t-shirt, man. This quote, but like, research trades, the way to the future. I don't know. I'll work on that.
T-shirt number 2. What the fuck, Chuck?
What the fuck, Chuck? Yeah, or yeah, it's my story sticking to it. But yeah, so just, yeah, what was it saying? Man, I completely lost my, and you had ADD.
You're talking about sticking to a plan, sticking to your guns, not caring about that, understanding the market before you place trade.
Yeah, being an analyst first. Analyst first. You have to understand what the market is doing. Yeah. Like if you don't understand, do the research trades. The research trades, which I call the 0.01 or whatever it is for you, right? If you have a 500 grand account, it's probably 3 lots or something. Research trades, right? They don't mean anything to your equity. Even if you go 100 pips below in the opposite direction, you don't lose anything, but you find out what the market is doing. I do this all the time. I go into US
like that.
100, and then I'm like, okay, I think to myself, I think this is the area where we need to turn around. Boom, marked it out. Okay, I think this is a break structure. I'm gonna put a 0.01 here. All right, if I'm wrong, okay, so if I'm wrong, what are we doing? Oh, okay, so we're coming higher. There's nothing to stop the price. Then I think it's gonna go here. So I'm gonna wait for break and retest or some extreme here, and I'm gonna place 0.01, 0.01. Then it does it. Then I'm like, okay, that means that I missed the mitigation somewhere. So like it helps you figure out what's going on in the market. So try that. Try that. Also, for those who don't know, my trick on double trade of taking 1 to 2 and then 1 to many, that also helps not lose for newbies as much. Because if you got at least the order block you got right, there will be a reaction for the most part. The reaction of 1 to 2 will be okay with you. Even if you lose the second trade, you'll still be up.
That'd be a good topic for next week. Trade management.
Fabio's got jokes, man.
I know, I like that.
If you
That's what's
plan out
laughing.
your side chick. All right, I'm gonna stop the recording. We're going on a couple hours now. All the other questions, Instagram us. If